If you're using the default MACD settings, 12, 26, 9, your crossover signals are probably showing up after the move already happened. That setting was built in the 1970s for weekly stock charts. Not exactly designed for how most of us trade today. In this video, I'm giving you the exact MACD settings for scalping, day trading, and swing trading. The combinations experienced traders actually use, not just the textbook default. I'll show you how to change them in under 30 seconds, and how to filter out the fake crossovers that catch beginners off guard. Quick disclaimer: MACD is a lagging indicator no matter what settings you use. By the end of this video, you'll know how to work with that instead of against it. Quick refresher on how MACD works if you need it. It's the difference between a fast EMA and a slow EMA, plotted as the MACD line with a signal line smoothing it out. When the MACD line crosses above the signal line, that's a bullish crossover. Below, it's bearish. Simple enough. The problem is the default: 12, 26, 9. Those numbers come from Gerald Appel's original research in the 1970s, designed around weekly charts. On a 5-minute or 15-minute chart, that same setting reacts slowly. By the time you get a signal, the early part of the move is already gone. That's not a flaw in MACD itself. It's a mismatch between the settings and your time frame. So what should you actually use? It depends on your style. Here's a starting point for each one. Scalping, on 1-minute to 5-minute charts. The most commonly used fast setting is 3, 10, 16. It's extremely responsive, reacts almost immediately to price changes. The trade-off is more noise, more crossovers, and more of them false. This setting is built for traders already filtering signals with price action or volume, not using MACD as a standalone trigger. Day trading, on 5-minute to 15-minute charts. A very popular middle ground setting is 5, 35, 5. It keeps the fast line reactive, but the longer slow EMA smooths things out so you're not whipsawed on every small pullback. If you want something a bit less aggressive, 8, 17, 9 is another widely used day trading setting. Smoother than 5, 35, 5, faster than default. Swing trading, holding for days or weeks on the 4-hour or daily chart. You don't actually need to move far from default. Plenty of swing traders just stick with 12, 26, 9 for slightly smoother signals with fewer false starts. 19, 39, 9 is a common slower variant. One thing I want to be upfront about: none of these are magic numbers. They're starting points a lot of traders have converged on because they tend to match the rhythm of each time frame. Test any setting on your specific market before trusting it with real money. Let me show you how fast this is. Open your chart, click Indicators, search MACD, add it. Click the Settings gear icon next to the MACD panel. You'll see 3 inputs: fast length, slow length, signal smoothing. Swap in whichever numbers match your style from the list I just gave you, hit OK. 15 seconds, done. I use TradingView for basically all of my chart work, mainly because saving a custom setup like this as a template means every new chart you open already has your settings loaded. If you don't have it yet, there's a link in the description. It'll also get you a discount on your first plan. Here's the part most tutorials skip. A faster setting means more crossovers, and more crossovers means more fakes. Before acting on any crossover, run it through 3 checks. First, the histogram. If the bars are shrinking as the crossover approaches, momentum is weakening, the signal is less reliable. You want the histogram expanding into the crossover, not fading. Second, the higher time frame trend. Scalping on a 1-minute chart? Pull up the 15-minute or 1-hour chart and check the overall direction. A bullish crossover against a strong downtrend up there is a lower probability trade, even if it looks clean on your entry time frame. Third, wait for the candle to close. An early crossover can repaint before the candle finishes. Acting mid-candle is one of the most common ways traders get faked out. Give it those extra seconds. None of this adds much time to your process, but together it filters out a large chunk of the false signals that come with faster settings. Quick example, 15-minute chart using the 8, 17, 9 day trading setting. Price has been trending down, then starts to consolidate. Watch the histogram. The red bars shrink each time, telling us selling momentum is fading before we even get the crossover. Then the MACD line crosses above the signal line. Before jumping in, check the 1-hour chart. Trend has already flattened out, so this isn't a counter-trend trade anymore. It's aligned. Candle closes above the recent range. 3 confirmations lining up with 1 crossover signal. That's the difference between trading every crossover and trading the ones that actually have odds in your favor. A few mistakes before you go set this up. Don't trade MACD in isolation. It's a momentum tool, not a full strategy on its own. Don't take every crossover regardless of the broader trend. Direction still matters more than the indicator. Don't switch settings after every losing trade. Pick one, test it across enough trades to actually know if it fits you. And don't ignore the time frame mismatch that got us here in the first place. A setting that works on a 5-minute chart won't behave the same way on a daily chart. Quick recap. 3, 10, 16 for scalping. 5, 35, 5 or 8, 17, 9 for day trading. 12, 26, 9 or 19, 39, 9 for swing trading. Confirm every crossover with the histogram, the higher time frame trend, and a closed candle before acting on it. If this helped, subscribe. I'm covering one indicator setup like this every week. And genuinely, what time frame do you trade most? Drop it in the comments. That tells me exactly what to cover next.